has started recording, hasn't it? Sorry there, Mohannes. It didn't pop up
Yeah.
to say brilliant, perfect. Well, yeah, good morning, everyone, and thanks for having us this morning. As you can see on the screen, we're going to be touching on relevant life policies with you today. You probably won't know who I am. My name's Jacob Hambidge. I'm one of the protection consultants here at Zurich. You may be aware of Emma because she's fairly recently become your consultant here at Zurich, and she's kindly obviously invited me to support with presenting on relevant life this morning. What's quite good is because you have got two of us, you won't just be listening to one voice this morning. We're both going to touch on bits of the presentation today. So I'll start off and then Emma will finish off with some of the better bits, I would say, to be honest with you, in terms of the presentation declaration today. The session itself, it's only going to last somewhere between 20 and 30 minutes. From what I gather, there may be a difference in terms of experience around business protection and particularly relevant life policies. So if this is slightly newer to you or you are slightly newer to the industry, this is probably going to be quite helpful. If you have got a bit more experience, there may just be those one or two things you take away with you this morning, but hopefully there will be a little bit of everything, a little bit of something rather for everyone in there. In terms of questions as well, it's probably best just to hold fire with those because we're going to have a little bit of time towards the end so we can pick up any questions as we go through. If you can as well, just because it's a slightly larger group, just stay on mute just so we don't hear the background noise as well, just for distractions for people, because sometimes I know that can be a pain for a few people listening. In terms of this first slide, it's just asking you not to share this presentation with your clients simply because it's been designed for advisor use only. But with me having said that, and I know it's being recorded anyway, this session, Emma can send across a PDF of the slides there for you as well. So you will get what we go through today. As well as, and I don't want to steal Emma's thunder because I think she's going to briefly touch on this a little bit later, but we do have a number of sales aids via our intermediary website, which you can also use to help support the sale going forward as well. So yeah, there's plenty of bits that you can use to help. Another good point here. So we've left the learning objectives in here just so you can self-qualify the CPD there for yourself. So you get 30 minutes worth out of the session this morning. So firstly, we're going to understand the criteria for a relevant life policy, then be able to identify the clients and who would benefit from a relevant life policy. Know how the relevant life policy trust works because there is a specific trust to use. Understand the tax treatment of the premiums and benefits. So that's quite a big point when it comes to relevant life cover. And then lastly, know where and how to access Zurich support for relevant life policies. So hopefully that's all okay and what everyone was expecting this morning. So as I mentioned, I think I sort of alluded to the point just before a few of you joined a little bit earlier. When it comes to business protection here at Zurich, we have 3 areas in which we can offer cover as part of our proposition, all of which you can see on the screen right now. As I've mentioned, we are going to talk specifically about relevant life today. So if you do have questions on other areas, we can obviously pick that up at a later date. We are hoping that if it is successful today, we can do sessions on both our key person protection and shareholder protection as well. The focus today is looking at how we can protect the employees, but of course the other two look at how you can protect the business and the business owners. As I say though, today's focus is primarily on relevant life policies. So relevant life policies. To keep this really simple, because I do think business protection is quite often overcomplicated, relevant life policies are simply a life term plan. The reason that this is taken out via a business is because there are tax efficiencies to it. And to be honest with you, it pretty much is as simple as that. In terms of again, I don't want to steal what Emma's going to touch on a little bit later because she's got a really good case study which will evidence why it's more tax efficient and will ultimately save that business money if they take it out via the relevant life route as opposed to a personal plan. Who can take out a policy then? So that's one of the big questions. There's quite a large variety of people who could take out a plan. Typically, it tends to be smaller businesses, for example, like a sole trader, a limited company, a partnership, an LLP, even a charity. They could all be eligible to take out a plan when it comes to relevant life policies. In terms of eligibility, we're quite broad in terms of the age bracket. So anyone between the ages of 18 and 73 could take out a plan. but they must exit by age 74. So based off what I've said there, you could have a plan which lasts just a year. It can also go up to 50 years as well. So there's quite a bit of flexibility around what can be done. On screen now, there's a few of the most common reasons that people tend to select a relevant life plan. Top one being there, so small businesses that are not eligible for a group death and service scheme. And when I say not eligible, it's typically because they don't fit the criteria, or because death and service schemes that you can get via a workplace, they're usually suitable for quite large businesses. If it is a smaller business, that tends to result in it being quite expensive premiums, in which case it's just not suitable for them, whereas relevant life plans are targeted at smaller businesses. So naturally, this is going to be something that's quite effective for them. Employees in a salary-based death and service scheme. So sometimes something that is a little bit overlooked. However, this can ultimately result in your clients not being shortchanged. Let's say, for example, your clients, a large portion of their income is made up of monthly bonuses and commission, let's say. If they were to take out a death and service plan via their workplace, it would only cover that salary, in which case they're being shortchanged. So what they can do is they can, of course, still have that death and service scheme, which they'd normally get as just part of their natural benefits in the workplace, but then also take out a relevant life plan to top them up for those for the commission bonuses. So it's like a combination of the two working alongside each other. And then lastly, and tends to be what people use it most frequently for here, so business owners seeking tax efficient family protection. So there is no difference in terms of a relevant life plan and a personal life policy in terms of that end goal. It's still going to pay that lump sum payment in the event of death. Business owners take it out via the workplace simply because of the tax efficiencies to it. But again, that's something we're going to come on to in a moment. So how it works then, a little step-by-step guide just to keep this really simple in terms of the process, and I guess like the thought process was part of this. So the policy is taken out by the employer to provide a death in service benefit for the employee. The trustees own the policy and the company pays the premiums. When it comes down to the trustees, the employer will be listed as a trustee on there, and then the person that's going to benefit from the plan can also list further trustees as part of that as well. Corporation tax relief is available on the premiums, but it's not treated as a benefit in kind to the employee. So that's one of the big factors of why small business owners like to do it via the business, because of that tax relief. It's written under a relevant life policy trust and should be free of inheritance tax. So, of course, it's a great outcome there for the actual individual that's going to, or family of the individual that's going to benefit from it. Premiums don't form part of the pension's annual allowance. And then the sum assured is paid free of income tax and does not form part of the new pension lump sum or death benefit allowance. So hopefully that's nice and straightforward. The flexible benefits then. So I'm hoping that a number of you are quite familiar with Zurich, perhaps more so on the personal side of things. If you are, you'll probably be aware that we're one of the market leaders when it comes to flexibility and contractual change. So we're very conscious that the likelihood of your clients' needs remaining the same throughout the term of a policy is quite slim. Let's say it's over 25 years, which they typically are. Those needs are very likely to change over that time frame. So therefore, we've got a number of benefits that you can utilize. Free cover. So again, if you're familiar with the personal side of things, you'll probably be familiar with the term of free underwriting cover. So if, for example, and this is the most common reason that this happens, you put an application in with Zurich, it's gone into underwriting, the GP's been, let's say, a little bit less than proactive in terms of sending that report back to us, we'd still cover your clients as if they'd taken out the plan with us, much like what we do on the personal side of things. Like it says, up to the threshold of £2 million. There are certain terms in terms of when we can offer this. For example, we can only offer this up to the age of 54. Another example, if your clients have been offered terms by Zurich, they'll have 2 weeks in which case to take out the plan. If they don't do it after 2 weeks, that free cover will end. So just the common things that you would expect when it comes down to free cover. We also as well offer level increasing and decreasing cover. I know we're not going to focus on Zurich so much specifically today, but what I would say is that a USP to Zurich is that we offer the decrease in cover. I believe we're still the only provider in the marketplace that does that. When it comes to decreasing cover, we can offer anything from 2 to 18% with 2% intervals. So you can, in theory, you could match this up to a mortgage. That isn't something we commonly sort of say here when it comes to relevant life plans, but it could be taken out for that purpose. And then the milestone benefit, or GIOs as they're also commonly known in the marketplace. I don't know why it is we call it the milestone benefit when I think a lot of other providers call it that GIO. But again, this is quite handy for a number of scenarios when those events change within your client's life circumstances. Like, for example, getting married, taking out a new mortgage, a pay rise, becoming a parent. They're things which you can which, as long as you activate that within 90 days and make us aware of that, you can increase the sum assured as part of that. So how much does the policy pay out? You can see on the screen here exactly how we do our calculations in terms of what we can offer. What's really important for me to say here, though, is that this is the maximum sum assured and not strictly what your client should, of course, select. It's highly unlikely they will need the maximum sum assured. Of course, there will be that odd scenario where that could be what's required for that individual, but it's commonly a lot less than what the maximum is that we can offer. For example, I think if your clients were 45 years old and had a salary of £80,000, they could in theory take out £1.6 million worth of cover. I think in quite a few scenarios that will be too much there for them. And of course, because we're going to pay out more, the premiums are more expensive as well. Again, like it says at the very bottom here, we don't just focus on the salary. You can also factor in bonuses, benefits in kind, and dividends earned as part of the calculation. So I know sometimes for tax efficiency purposes, they might have a low salary. If they are taking out dividends earned as part of the year to obviously be more tax efficient, we can still factor that into the calculation. So it works out quite nicely for those individuals. Yeah, hopefully so far that all makes sense. I think Emma's going to take over from here just to finish off with some of the other points.
Yes, thank you, Jacob. Let me just take control. Yep, can everyone still see, hopefully? Thank you for running through that, Jacob. I'm going to run through the second half of the presentation now. So the next example that I wanted to look at is an example of a client paying for a plan personally compared to a company paying it as a relevant life policy, just to show you the difference in premium. So in this scenario, we've got a client called John Smith. He owns all the shares in his own limited company. He does have a life policy written into trust for the benefit of his wife and children. Premium on that is £200 per month, and he pays the premiums himself out of his net income. So the reality, though, in this scenario is that the true cost of the policy is not £200 a month. The true cost would be a calculation based on what it costs John's company to put £200 per month net into John's pocket to enable him to pay that premium. So if we assume that John is a 40% taxpayer, national insurance at 2%, in addition to the employer's NI at 15%, this takes the premium to a net cost of £396.55 a month. However, the company can access the corporation tax deduction. So you can see on the screen that the true cost to the company is £321 per month. But this is still a big chunk that the business has to put into John's pocket to allow him to purchase that cover. Okay, so we're now going to look at the same policy paid as a relevant life plan. So everything is the exact same. The only difference is the way that it's written. So it's still a life insurance policy written into trust for the benefit of John's wife and children. The difference here, though, is that the policy isn't not owned by John, it's owned by John's company, who then place the policy into trust for the benefit of John's family. John doesn't pay the premiums either, they are paid by the company. Company receives corporation tax relief on the premiums, but there is no tax or NI liability for John personally or employer's NI liability. So as you can see on the screen, the end result is that it costs John's company just £162 per month for a relevant life plan, compared to the 321 we saw on the previous slide. So this is a saving of almost 50%. So this example highlights the tax saving that relevant life policies can benefit from. And it's one product that will always have a tax saving. Good news is that we do have a relevant life calculator on our website, so you can demonstrate this to your clients. So all you have to do is complete the blue boxes, put all the client's details in. So in this scenario, we've got John. You put in the premium, the tax details, and the calculator does the rest. So it's a simple spreadsheet, and it will tell you the saving that the client can make by doing a relevant life plan compared to a personally owned policy. The left-hand column shows John paying personally. The right-hand column shows the savings when doing it through relevant life. And with this, you can print it out as a one-pager, you can print it as a PDF to show to your client, to attach to your suitability letter in your file as well. So this calculator is on our website, so at the end of today, I'll send over the link to everyone as well. Okay, so looking at the relevant life trust. So the trust is a discretionary trust. So normal inheritance tax rules will apply. It does mean that there may be potential periodic and exit charges, which I'm not going to touch on too much today, but that is fully explained in the relevant life policy trust documents that we do have. So just some notes on the relevant life trust. It can't accept existing policies, and we must have the original before we can put the policy on risk. The easiest way to do the trust is to use our online signature-free trust as part of the application. And that's one of the selling points for using Zurich for relevant life. Not everybody offers the online trust. So the employee or the member completes a nomination form, which is a non-binding expression of wishes to the trustees, detailing where they want the money to go. Similar to nominating beneficiaries under a pension scheme. And we provide a form of nomination as well, which should be kept by the trustees. The employer will always be the first trustee, and the trust form does allow for the appointment of other trustees, normally including an independent person, member of their family, for example, basically someone that they trust. The benefit is paid by Zurich to the trustees of the trust. The trustees have discretion as to who should receive the benefit and the terminal illness benefit. It's normally quite unusual to go against the wishes of the individual, but sometimes these things do happen. As we know, families do sometimes fall out, so each situation is different. If the terminal illness benefit becomes payable, it is expected that the trustees will pay it to the employee, but it's worth mentioning that the terminal illness benefit is only payable when the life assured is in employment. We do have a completing a relevant life policy trust guide on our intermediary site, but again, it's a lot easier to use the online trust because we don't need any signatures for that. Okay, so another advantage of a relevant life plan is flexibility. So the life assured can take the policy to a new employer or carry on paying the premiums personally. It doesn't matter who pays the premiums, as a relevant life plan is simply a life policy in a trust. If the life assured moves to a new employer and they're happy to pay the premium, all we need is a new direct debit. Once the new employer starts to pay the premiums, they can start claiming the tax relief. If the employee leaves the business, but they don't go to a new employer, or the new employer doesn't want to carry on that cover, they can take over paying the premiums themselves. And again, all we need is a personal direct debit. You would have to give up your interest as a potential beneficiary for terminal illness under the trust to avoid gift with reservation rules. So it's worth mentioning that if the client still wants terminal illness, it may be best to write a new personal term plan in that scenario. In both these examples, the trustees would need to be altered. So the original employer was the settler and is therefore the first trustee. So we'd need to retire the old employer and appoint either the new employer or another individual. And again, we've got all the paperwork available for you to be able to do this. So another good piece of news is that we have lots of valuable resources to help you when you're writing Relevant Life. So we've already looked at the Relevant Life calculator, which can make your life so much easier and show a tangible benefit to the client. And in addition to this, we also have the tools that you can see on screen. So just to summarise, we do have the option for underwriting questions to be delegated to the client. So if the client would prefer to answer those questions, you can send them to the client for them to complete in their own time. We also have a pre-application underwriting tool. So if your client has any type of medical disclosure, that tool will give you an instant decision. There is also access to a live underwriting chat option as well. We do have a large sum assured underwriting team. So if you have a large case that you want to discuss, we have a dedicated team that can help. Milestone benefit, Jacob's already touched on this, so I'm not going to go into too much detail, but as he's already said, if your client goes through a life event throughout the term of their policy, so getting married, having a baby, pay increase, etc., then there is the option for the client to increase the sum assured by up to 200,000 with no underwriting needed. So it just helps to keep the protection aligned with any life changes that happen without needing any underwriting. It's worth mentioning that on Relevant Life, these milestone benefits are the same as on a personal plan. If you were ever to do a key person plan, the milestone benefits are slightly different because they're linked to business changes. If you take out a policy with Zurich, all of our policies have support services built into them. So these are available throughout the term of the policy, doesn't have to be in a claim to be able to use them. The client's family can also use these as long as they live at the same address. It's free, independent, confidential advice, and it can provide a range of benefits. So help with things like mental health, bereavement, debt problems, emotional issues, legal support, anything like that. We also offer access to short-term counselling, which is up to 6 sessions, provided by fully qualified counsellors. And if the client does need to be referred for long-term support, we can do that after the 6 sessions. So I think that's especially relevant when you think about the referral wait time at the moment on the NHS for mental health services. I just wanted to quickly touch on empathy as well. So this is available to any client who has a life policy with us. And it's worth mentioning it's only available via Zurich in the UK. And this is also available to you, the advisor. And what it is a bereavement support service. So anytime we get a claim, we would notify the client's family that they have access to this bereavement loss support. So it's a combination of practical support, things like closing bank accounts, cancelling subscriptions, etc., but also emotional support, accessing a counsellor, that type of thing. We also recently opened this up to any client who themselves has a terminal illness diagnosis. Anyone who is given less than 2 years to live, they can now also access empathy. And just to kind of finish off today, as you'd expect, we are on hand to support you, and we have a full range of support teams who can help with all aspects of your business. So we do have a team of protection consultants, including myself and Jacob. We're only a telephone call away, and we have field-based protection specialists as well. And our aim is to work with you, help develop and grow your business, answer any questions that you do have about the proposition. If you have any technical questions, we do have a specific technical team as well. We've got the large case underwriting team, agency, e-support. And of course, as we've touched on, we do have the website as well. We do have separate sections on there for business protection and Relevant Life. We have the Learning Hub, which has a lot of videos that are all CPD-able. So I'll send you the link to those after today. And then just to kind of summarise the learning outcomes that Jacob ran through at the beginning, hopefully you're thinking of a list of potential clients that you can discuss Relevant Life with. Relevant Life is often a really good place to start when you're looking at business protection, because it's the one area that always demonstrates a tax saving. So it's a really good stepping stone if you're going to be speaking about key person and shareholder as well. So at the end of today, I will be sending out a copy of the slides. my contact details and Jacob's, and also the links to all the relevant sections. And I know from speaking to Mohan that there may be appetite for future sessions. So we have separate webinars on key person and shareholder. So if there is interest, we can get something booked in for those as well. And just to finish off, thank you all for joining today. We hope you found it of interest. Does anybody have any questions?
All fairly quiet there.
Hopefully that's a good thing that we've covered everything.
I think it's worth emphasising what Emma mentioned towards the end there with our technical team, only because I think they get massively underutilised. They focus primarily on business protection, taxation and trusts, and a lot of questions that come up within business protection tend to be quite unique or specific to the circumstance. So what I would urge you to do is just give them a call directly. You can speak to them just the same as how you'd speak to me and Emma, and they can quite often just instantly answer whatever that specific query is when you do get that certain case. Because as I say, there's they definitely don't get used like they should. I think they've all been working for Zurich sort of 15-20 years plus now, so then, as you'd expect, very knowledgeable in that space. So yeah, I'd urge you to make the most of that team.
Right, thanks Jacob, thanks Emma, really appreciate your webinar, very useful. Thank you.
No worries. And like I said, we can reach out by email. So if anyone has any questions or wants to discuss anything, we can pick that up later.
Great. Thank you.
Thank you, everyone.
Brilliant.
Thank you, guys.
Thank you.
Cheers.
Have a good day.
Bye.
Bye.
You too. Bye-bye. Bye.